Oh man, so we know that the retail investors love Palantir, but why is there no love from Wall Street? Let's find out, because Palantir have been smashing earnings. We saw in their latest quarterly report, they were up 49% on revenue. They increased the number of SPACs they purchased. They increased the number of clients they won. They won 61 new clients. And they also increased the selling of their Foundry platform to commercial companies. All things that investors wanted to happen. So what's going on? Why is there no love from Wall Street? So let's take a look. And there's a bunch of different bears which we want to look at who on Wall Street are quite bearish. Now, the average 12-month price target for Palantir is $24, right? And analysts see on average a 16% downside to Palantir, which is quite concerning because Palantir is currently sitting at $27. We've had a good run over the last week, and a lot of SPACs have been running recently, and Palantir, another retail stock alongside some of the other retail trades, has been seeing a bit of a rally recently, but this Wall Street is still bearish, and we need Wall Street to get on board in order to see our next pump. So the first thing is that Citigroup see a 41% drop, and they have a sell rating on Palantir, and they're quoting that there's low quality revenues. And what they're referring to is what I'm showing you on the screen. They refer to this. So we know that apart from selling their commercial and government agency programs, Gotham and Foundry, Palantir have also started buying SPACs, and they've bought a few different SPACs, and we covered this specific one you can see on the screen, Wajo, however you pronounce it, which is the data analytics EV and car company. But they're saying that they're buying these SPACs and then they're using them to sell their product to. So they're selling Foundry to them, and this is low quality revenue, right? You're acquiring them and then making them a customer is a bit of a concern because you're just investing in them, and it's not a high quality type of customer as you going up to Airbus, which by the way is a Palantir customer as well, and securing them as a commercial customer. And I can see some weight in that, but this is not the only source of revenue. I mean, these, you got about, I think, how many on there? 10 or so SPACs there who may or may not be customers, but in the last quarter, Palantir closed on 62 new deals worth more than $1 million each. So you can't say that they're just relying on their SPACs for customers. So I disagree with that from Citigroup. The other bear is Morgan Stanley. Now, Morgan Stanley have a sell rating as well at $22, which is $5 off where we are now. And they believe, and their concern is around Palantir not being able to sustain their targeted 30% growth. And I don't know where they're getting this from. I mean, how are they backing this up? We saw 49% revenue growth in the last quarter. Again, we saw commercial revenue grow. So they've had solid earnings, and I don't think you can point to that as being the reason for your sell target. Wolf Research and RBC Capital have a price target of $25, and you can understand why a lot of Wall Street find this one a bit risky. But I feel like the reasons they're giving here are a bit disingenuous, because I think if they came forward and said, look, Palantir, you're trading at a 2022 forward PE of about 135, you're trading at a forward price to sales of about 30, and for me, I don't know if it's worth the risk. I think that's a sensible view for any, Wall Street firm to say. But to say that, they've got low quality revenues and I don't think they can achieve the 30% growth, that's a bit disingenuous because they've proven that they can. The earnings have been solid, and those aren't specifically, as an investor of Palantir, those aren't my specific concerns. Now, my concern is as follows. Let's take a look at this page. And on this page in their quarterly earnings, we can see how their revenue splits by different sources. And I've always put this out as a red flag just to be open and honest about how I feel about Palantir. And the red flag for me around Palantir is their lack of ability so far to diversify. But I've seen a trend of them getting better and trying to identify that they need to get better. So you can see here of the 375 million here, 232, which is well over 2/3, is coming from government. So you can see they're skewed towards government agencies. So that's a concern, and I've always flagged that as a concern. And you can also see if I scroll up a little bit here, you can also see that, but geographically, of the 375, 53% is coming from the United States. Okay, so we've got a lack of diversification between government and commercial, but also geographically, rest of the world is starting to pick up. It's at 31%, but there's not enough going on elsewhere. So if they started to lose some key government US contracts, that is a concern for me as far as Palantir concerns. But we've seen a trend moving in the right direction. They've started signing up some. Commercial companies. They're gaining some traction with their Foundry platform. Remember, Foundry is their platform for commercial companies. Gotham is their more for government agencies, CIA, and these kind of platforms. And you've really just got to give them an opportunity to kind of grow. A lot of people point to their low customer count as being an issue. I don't see that being as much of an issue. Like we said, they've just added 62 more deals, so they're diversifying each quarter. So they've identified that. And now they've hit a milestone in that no single customer accounts for 10% of their revenue. We want to see that even lower, but it's progress, right? And it's just the nature of the business they do with high level contracts. Their average revenue per contract is $7.9 million the last I checked, right? So that's massive, but that will skew down the more commercial clients they sign up. Naturally, when they were a private company, they had a lot of government agencies and defense contracts, and they were doing vaccine rollouts, right? Recently with the UK government. These are going to be high value contracts, and it's going to skew their figures. But as they start to get more commercial companies on $1 million deals, that 7.9 million average revenue per customer will come down, and they'll diversify their revenue base. And this is a bit of a trend because, this is not the only equity in the world that needs to diversify their income. You hear me talking about this a lot. This is a red flag for Robinhood. This is a red flag for Coinbase. We've seen this with a lot of platforms that, what works for them as a fast growing company, you double down on. That's what fast growing companies do, right? If it's working in the United States for government agencies, it makes sense for Palantir to continue to focus on that, right? Then as you become a bigger company and you've saturated that market, you start thinking about diversification. If you focus on diversification too early, you'll never grow that critical mass of your company. So whilst it's easy for Wall Street investors and analysts to say, oh, it's not diversified, look at that percentage here, and they're too reliant on a couple of customers here. That's how fast growing businesses grow. They have to double down on what they're good at, otherwise they'll miss that opportunity. It's a land grab. It's like saying to Uber, you should focus more on your Uber Eats business when they've got a land grab in the car business, right? In the taxi business. Get that fixed, then you can diversify to Uber Eats and apply more and more attention there. And that's why, whilst it is a concern for me and I flag it, it's not something that I'm going to make a knee-jerk reaction on, because Palantir can improve that over time, and it's clear that they're focused on doing that. So that's one of the things which is pretty much holding Palantir back. We've seen a good rally from this $20 low here. We had an even more bigger low in May. In May, we were sitting at a low of 17. We pumped up, got hit by this resistance on this 27.43 line I shared, and we got sent back to 20. And now back at that resistance at 27.57, it looks like we're getting rejected here. Let's look at the 4-hourly chart for Palantir. And yeah, you can see we're just struggling to break through this little line here. So we've created a new top here and it's bounced back down, and we're struggling to kind of push through that. But if we do, and I'm switching back to the daily here, if we do break this, we've got a lot of green grass. I mean, you've got a bit of a resistance at 30, you can argue, and a little bit, about the 30 mark dating back to November 2020 around here. But after that, you've got a lot of green space from a technical perspective for Palantir to run up to the 38 mark. And if Palantir continue to provide the earnings reports that they have been, and they have another strong Q3, I suspect Palantir can start getting moving and really start getting the attention of some of these institutional investors. Because let's face it, institutional investors have money to place right now, and they're looking for opportunities which aren't the Amazon and Apples, because they're looking for opportunities which are going to move quickly. And Palantir is a great example of a company that is in an early stage and has a lot of growth potential in it. I mean, there's so much untapped potential in this stock and it's been beaten down for a long time for no apparent reason, that this, I feel, is really due for a big tear up, and it's not had one yet. We can see we're sitting above our EMA ribbon here nicely, similar to here, although we've created a higher high, which is really positive. So as long as we don't create a new lower low, we create a low below 20, above 20, anything, the next dip, as long as it's above 20, kind of the 24 mark will be nice as a little dip buy. And then I can expect it to pump forward and really break through these green line resistances here. Overall, a great stock. Really excited with Palantir as an opportunity for investors. I think if you do your research on Palantir, you'll see it's a really top stock. I mean, I point out the diversification issues, but if you look at the growth, it's just phenomenal. And just from a fundamental point of view, just kind of, step away from the numbers. Who's doing the work that Palantir's doing, right? The world is creating more data than ever before. I can't remember what the stat is, but something crazy like in a day you're creating more data than was created up to the 19th century, right? Or something crazy like that. Someone comment below if you find that stat. And what are we doing with that data? I know from working in commercial companies that companies are struggling hard to interpret the data they've got. They've got banks and banks of data, and the CEOs of this company are dying to create meaningful intelligence and insights into their business. But they can't do anything with it, right? Like the partnership with Weijo that Palantir have just announced, they've got so many data points, trillions of data points. But what are you going to do with that? Fine, you've organized it and you've got some nice data points. We need insights. Businesses need insights, and they're chasing that more and more. And if Palantir can position themselves as the company that does that takes all your big data sets and turns it into meaningful insights that's going to actually help you drive revenue and improve your margins, this is going to be a no-brainer over the next 10, 15 years, because the data, once internet-connected devices increases and proliferates, I mean, that's projected to get to 21 billion connected devices over the next kind of 10, 15 years. So once that happens, data is going to grow exponentially even more, and this problem is only going to get worse and worse and become exacerbated. And that's where players like Palantir are going to have to come and sweep up the mess of all this data sitting in structured and unstructured databases, which need to be turned into insights, because that's an untapped gold mine for all commercial companies out there. And Palantir have successfully done that for governments, and no doubt their government business will continue to grow, but the commercial piece is where the real fruitfulness is going to be, and the real opportunity is going to be for them to tap into. And I think they've got a clear run at doing this. I can't name a competitor that's close to Palantir's level of ability. They've got 10 to 15 years of IP in what they've built, and I think that's really going to stand them in good stead. I mean, taking them so long to build the Foundry and Gotham platforms, they've been through the rigorous security and hacking testing of a CIA and government agencies, which I can't see any other companies getting through in any short period of time in terms of competitors. There's so many barriers to entry to compete with Palantir that they really are standing at the fore of really snatching this market if they continue to operate at the level they're operating. So there you go, guys. That's my take on Palantir. I know it's been a while since I've published a video on Palantir. If there's anything you want me to dive into a little bit deeper on Palantir, comment below. And if you like this type of video on stocks like this, then please don't forget to hit the like button so I know you like it, and subscribe, and I will see you in the next one.